Hey traders, TG Watkins here of simplertrading.com. And if you guys are more interested in me specifically, you can come over and look at my website, profitpilot.com, seen here, and we're going to be providing more information in the link for you. Now, this video is going to be going over what the Moxie indicator is. It's going to be a brief overview of what it is, how I trade it, how we look at it. And if you guys need more information or interested, come over to simplertrading.com and come check out some of our products related to the Moxie indicator. All right, so to get you guys familiar with what the Moxie indicator is, it's basically a momentum-based indicator. So it can tell me what's really going on inside of price, kind of behind the facade of price, if energy is coming into it or coming out of it, if there's something getting ready to build to the upside, or if energy is kind of declining inside before a move actually happens. One of the ways that it helps us figure this out is by divergences. So let me just kind of show you a couple things about the indicator to start off. We happen to be looking at PZZA, which is Papa John's, but there are numerous tickers that I could be showing you examples on about how this works. So just look at this as a basic example. So the first thing that I'd be looking at are that we have the zero line, right? So what that tells us is anything above zero is positive, anything below zero is negative. So positive energy, negative energy. So this will work out if you are trying to be bullish or bearish. It just depends on what side of the trade that you want to be on. The other thing to note is we have these price triggers. So you'll see green arrows and red arrows. All that really does is correspond to when the indicator crosses above the zero line or below the zero line. So you can just see if you draw a straight line right here, that's when the indicator crossed below zero and went negative. Or if it was green, that's when it went above zero and went positive. So this just kind of tells you the way that I've designed this thing is it's actually pretty good about timing wise, that if you're going to be long, if you're going to be bullish, you want the indicator to be positive as well. So those are pretty important things to be looking at. The other thing to be looking at this is the higher that the indicator is above that zero line, the more gas in the tank that you have, the more energy that you have. And so one way to look at it is that if you've got that much energy, very, very high, well, it's going to take a while to burn off all of that momentum, all of that positive momentum before price actually rolls down. So I've got a couple other things I'm going to show you about that later called trampoline moves or inverse trampoline moves, because it just depends if you're bullish or bearish. The same thing goes if you are trying to take a long trade the other direction, is that if the indicator is very far below zero, it's going to be a pretty hard time for price to get going or get positive or not be a false long entry. One of those things I can show you over here, just jump into it real quick. An inverse trampoline move is when price is over the 50 SMA, but the Moxie indicator is still below zero. That means it shouldn't be there because energy is negative, but price is positive. And so what you can look at that, I have an example here with PZZA, that notice that the Moxie indicator was below zero this entire time. And so what that meant is that any time that price looked like it was going to go higher or looked like it was going to go up, that was a false long. So it's either some place you can short, or that's something that you just should not be going long because it's just not ready. And the Moxie indicator is trying to tell you and communicate to you that really energy is still negative. And so despite what price is telling you, it's not correct. So be careful about those situations when you're trying to go long. I think the Moxie indicator actually helps keep you safe in those situations. The other thing is about divergences. So you can see in through here that we've made new highs, but look at the Moxie indicator was significantly lower. What that's trying to tell you is, why did price go higher, but why did the Moxie indicator, why is it so much lower? So the price went higher, but it did it on less energy. And that's what that negative divergence tries to show you. And so it kind of tells you what's going on inside of price that price isn't telling you, because as the advertising mechanism that price is, you'd be looking at this being like, oh, new all-time highs. This is amazing. But if you look at the indicators trying to tell you like, it kind of went up there on almost no energy and no momentum, you might want to think twice or be careful about this situation. You can see that also here on the daily chart for Papa John's right there. You can see some negative divergence right there. Higher price, but did it on less energy. Kind of an issue. The same thing works in reverse. If you're trying to look for some longs, you can say, hey, well, we had price basically hold level here, and notice that the Moxie indicator had a positive divergence there. It's something to note. So that could actually work out to your favor if you were looking long. Another thing to look at right in through here, if we take in this one into account, is you can notice that price was going up, And then look, it pulled back right into support of that moving average. And notice that the Moxie indicator at that time went from negative to positive, and that is the perfect entry. That's the perfect situation where price not only tests support, but also that the Moxie indicator has gone from negative to positive. So it's those kind of things that we want to be looking for. Now, I can find all sorts of things to be talking to you guys about and how this works, and numerous different examples. Let me just show you, say, one more time. This is GBTC, this is Bitcoin. So two things to notice. One, that if you're long, this is how you can notice that, well, maybe you want to start getting out of it, or careful, there's going to be a pullback. On the daily chart, you can see price up and then price level. Notice that the Moxie indicator went level and then down and really started to head towards zero. And you can see that price was underneath there. The Moxie price triggers are pretty important too. You can see right there is where we got the Moxie price trigger to the downside. So that's to the downside. And then to the upside, I already covered what an inverse trampoline move is, but an actual trampoline move is when price is below the 50, but the Moxie indicator is above zero. That is a high pressure, high buoyancy type trade. Imagine trying to take a beach ball and try to push it underwater. It's going to want to come shooting back out. Or if you jump on a trampoline, it's going to shoot you right back up. Same concept here. You can see here that price went right below the daily 50, but notice that the Moxie indicator was still positive over zero. It was telling you that price should not be below the 50, and it's going to shoot it right back up because it's a high buoyancy type trade. So this was a really great, perfect recent example of something like this that obviously has paid off very well. So you can see that I talked about a pizza company and that I talked about crypto. So what sectors does this cover? Well, in my experience, it pretty much covers all sectors. Now, with a caveat, I will say that some sectors, some tickers, some ETFs, whatever, they're a little bit choppier. So some stocks, of course, work better with certain indicators. But for the vast majority of stocks, the ones where there is some flow, you can use the Moxie indicator to help figure out exactly what the energy is behind price. As I said, if some stocks are just super choppy or super volatile, or they just don't really hold a pattern, they're not going to work with the indicator. And that's true for any combination of indicators and stocks. But for the vast majority, it works for everything. In fact, right now I'm looking at GDX and gold as some other trades. It doesn't matter. Works for pretty much anything. If you want to be looking into financials, you can do that too. If you want to look into materials, you can do that. Consumer, doesn't matter. Just make sure that the chart works well with the indicator. All right, then now that we got that covered, one other thing that I tend to look at is what I call the elf shoe. And so for the elf shoe, the thing that I look at right here is we've had an example on the daily chart of the S&P. Now, basically, an elf shoe is just a double bottom, but it gives a really good visual so that new traders can actually put a pattern or put a normal shape to kind of these crazy patterns that we have in the stock market, right? So what we look at is, it could be a couple things: double bottom, inverse head and shoulders, something like that. But if you look at the moving averages in through here, we have price that come down. There's the leg, you have the heel, and then you have the first bounce. And the first bounce goes to the arch of the foot. And then we need to have price come back down and do the second bounce, or the second test the low. And in this case, you can see right there, that's the ball of the foot. And then you get the elf toe. And I call it this because if you think about Santa Claus and the elves, they have those shoes. And those shoes have that real curly tip. That's what we want to be seeing for price, because it's that curly tip that shoots off that actually gets us the money. And the whole concept behind this is that, some way, somehow, in order to determine that price doesn't want to go lower from a downtrend, is we have to retest the low area, and that's usually what a double bottom is. Now, it doesn't have to be perfect. It can be a shallow double bottom. It can be an equal double bottom. It can even be an undercut double bottom. So it's the idea in principle of what we're trying to accomplish: retest that low area. And if it comes back up from that retest, then we can start seeing that we're going to get that toe that looks like the elf shoe, and we'll get then we can start making some good trades in through there. So I hope you guys enjoyed that quick little explanation of what the Moxie indicator is. Again, if you have any questions, come on over to simplertrading.com or check out my website personally, profitpilot.com. And I hope you guys enjoy what you find over there, and we'll see you in the Moxie alert room. Thanks again.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me